What's going on, everyone? Welcome to Money Talk Sunday. Let's talk about the market. The markets have had a difficult year and the future seems a lot gloomier. But there are a number of reasons to remain upbeat in the new year, according to investor Kari Firestone. Now, when trading got underway this morning, Wednesday morning, the main averages had barely altered. 3 points were added to the Dow Jones Industrial Average. The Nasdaq Composite opened marginally down, while the S&P 500 opened barely above the flat line. Later on, as the day went going, stocks declined as investors made preparations for 2023 and the conclusion of a dismal year. 150 points, or 0.5%, were lost by the Dow Jones Industrial Average. S&P 500 and Nasdaq Composite both experienced declines of 0.6% and 0.8%, respectively. Now, Louis Navellier, the founder and chief investment officer for the growth investing firm Navellier Associates, stated that stocks ultimately collectively clawed into the green, but that it did not hold. After a lackluster start to the official Santa Claus rally, the market is doing its best to stay afloat on minimal volume. Since the hardest hit industries are engaging in some bottom fishing, there has been some regression to the mean. Now, as oil prices dropped, the energy sector was the S&P 500's greatest underperformer. EQT and Marathon Oil were two of the index's big losers. Southwest Airlines, and we've seen Southwest Airlines in the news recently, they kept losing ground as it kept postponing flights because of the harsh winter weather. The stock dropped by almost 2%. But it's not all about the harsh weather, because Southwest Airlines was the only one to have the meltdown over this past weekend out of all the other major airlines. Now, the stock market is on course to have its worst year since 2008, as the last week of trading comes to an end. Of the three indices, the Nasdaq has done the worst, losing 33.8% this year, as investors withdrew from growth firms due to escalating recession fears. The S&P 500 and the Dow Jones are expected to decline by 19.7% and 8.5%, respectively. According to the National Association of Realtors, pending home sales decreased 4% on a monthly basis in November. These data were among the economic data released on Wednesday. The decline occurred when prospective buyers were uneasy due to high mortgage rates. A drop of 1.8% was what economists surveyed by Dow Jones had predicted. A trading week that has been truncated due to holidays began yesterday, on Tuesday, at 33,241.56. The Dow increased 37.63 points, or 0.11%. The S&P 500 dropped by 0.4%. Now, Richmond's manufacturing outlook is improving according to a Fed poll. Due to an uptick in shipments, new orders, and employment prospects, the manufacturing sector in the Northern Virginia and Delmarva region exited contraction zone in December. The manufacturing index published by the Richmond Federal Reserve for December showed a +1 result, up from -9 in November and far higher than the -10 Dow Jones prediction. The indicator measures the proportion of companies reporting growth against countries. However, there were indications of inflation as the earnings index increased by 12 points to 37, and the prices paid and received indices remained positive despite having slightly lower values than in November. The expectation indexes were also mainly negative, especially for local business conditions, which showed a rating of -20 as opposed to -1 in November. Now, the areas of Charlotte, North Carolina, Richmond, and Baltimore are included in the district. Let's shift over to Tesla. Tesla is a big deal right now. As you know, Elon Musk, with all his antics, is tanking the price of Tesla. Shares of the manufacturer of electric vehicles increased, however, today on Wednesday by 4%. After the Wall Street Journal reported that the corporation would extend a week-long production pause at a facility in Shanghai, the stock dropped 11% in the prior session. Tuesday was the stock's 8th consecutive day of declines. So today, Wednesday, was the first day snapping an 8-day losing streak. Now, that comes at the conclusion of a turbulent year for the manufacturer of electric vehicles after owner Elon Musk carried off a disorganized acquisition of Twitter. This year, Tesla's share price has decreased by 69%. According to Eric Jackson, founder of EMJ Capital, Musk was a hero a year ago, and there was panic buying to the upside. Panic selling is happening right now. So what do we anticipate? We're going to anticipate more panic selling until Elon can right the ship. This stock is going to fall under triple digits. Mark my words. If he doesn't right the ship, the stock will fall. The stock will fall under triple digits. Fintech. What about fintech stocks? As the Federal Reserve increased interest rates, the value of a number of asset classes, including mega cap technologies and cryptocurrencies, deflated this year. Companies in the fintech sector are also going through a reset. According to investors, founders, and investment bankers, many of them, particularly those working directly with retail borrowers, will be forced to close down or sell themselves next year as startups run out of money. Others, they claimed, will accept money in exchange for hefty value reductions or onerous terms, extending the runway but posing more risks. The most active stocks in pre-market trading today, the following equities are moving most dramatically in the early morning trading. Tesla, as I mentioned again, following a 7-day losing run or 8-day losing run and drops in 10 of the previous 11 sessions, Tesla increased 1.6% in pre-market and is up 4% this morning. Although Baird has lowered its price objective for the company, it still believes it will outperform. AMC Entertainment gained 1.2% in pre-market trade after CEO Adam Aron requested that the board of the movie theater chain freeze his remuneration and urged other senior AMC executives to do the same. Southwest Airlines, the big culprit. Southwest Airlines, as it fought to get back to a regular schedule, SWA had a 1.3% drop in pre-market trading as it continued to postpone flights. Southwest is restricting bookings over the next 5 days after canceling thousands of flights over the previous week due to a severe winter storm. That is our market midweek check-in. Money Talk Sundays. I'm your host, Stevie B. Thank you for tuning in. Quick midweek check-in. Peace.